With the Alonso HFC event being successful, Cardano now sees smart contracts on the mainnet. But what does this mean for ADA? Guys, in this video, we're going to dive into the technical analysis here for Cardano's ADA to see what might be on the horizon next. As we get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you are new to the channel, then do subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here. Right, with that said, done that way, let's dive into this technical analysis for Cardano. We're going to start with a weekly chart here, because we like to kind of start things off by talking about where we have been and how low the price was and where we have gotten to so far and what we are expecting next. The weekly chart is very good at this. By zooming right out, you can see the patterns very, very clearly. Everything kind of started back in March of 2020, where the first wave started. We see the second wave coming down. Third wave was where most people really got into Cardano and the hype around it. The fourth wave correction took people by surprise, and now we are firmly in that fifth wave. Okay, so there are 5 impulse waves to the upside. This is Elliott theory, and so far every rule has been stuck to and has not been invalidated. There were some altcoins that were following this theory, unfortunately were invalidated by the fourth wave going lower than the first wave. For Cardano though, the fourth wave was actually quite shallow and not too bad at all, and we can see a nice growth back to the upside, setting previous all-time highs, smashing them out of the park, and now I think the high now is about $3.10, and we have seen a slight pullback from there. Again, this was actually quite natural. I started to see some data yesterday before the HFC event where we actually started to see a pullback being required. Obviously, Alonso hard fork combinator was successful, and as a result, you did see a little bit of a pullback. Now, I know a lot of people will be that's a sell the news event, and arguably it could be. There's a lot of build up beforehand, taking us to those highs, and then obviously a natural kind of pullback. But from here, it gets interesting because I do think we're going to see some significant growth in the near term as well. This is mainly down to what Chris has been talking about on the channel previously, which is all about the transactional volume and what happens once you start to see this actually hit the main net. For ADA, there's going to be a whole host of dApps built on the Cardano ecosystem, right? And they're not all going to launch instantaneously after you have seen a new HFC where we can start to use the Plutus and Haskell language for smart contracts. Instead, it takes a little bit of time to actually see these ecosystems and these new dApps launch. And once we do actually start to see them rolling on here, the transactional volume will start building. Once that is built significantly, we're going to see a huge push to the upside. So don't be discouraged by seeing this small dip today, because it is something that we're all kind of expecting to happen in the space. And then we're going to start seeing a nice rise in the next few weeks to months as we go to peak out the bull run in a really strong way here for Cardano. So like I said, everything started back in March of 2020. We have wave 1 up here peaking out in July. Wave 2 kind of bottomed out in September of 2020. Good push to the upside with wave 3, which took us to about May. So from March until May 2021, so for 2020 March, 2021 May, that was about 14,000% in gains on that journey to the upside there. Obviously, the slight pullback, and now we're pushing back to the upside. So overall, this weekly chart is looking pretty good. The structure is still there, and everything is kind of going according to plan. Now, we can take a look at the stochastic RSI in relation to our 5 impulse waves. We know that during our low area at the beginning, we were oversold, and we took a nice push to the upside for wave 1, which took us into the overbought area. The slight pullback taking us down into the oversold area for wave 2, and then we went up into the overbought area up here for wave 3. And again, we can see that we actually entered overbought all the way at the bottom here, and we stayed in the overbought status up until we kind of got to, I think it was around actually this point here where we started to lose momentum. Even though we went up and pushed higher and just towards the end here, ultimately there was a sideways trading that actually took this correction right at this point. Okay, so this was actually really ideal for us, this particular kind of correction here, and where we just traded sideways in between 2 key areas, and then we had that last little peak of an explosion taking us back up, and then we dropped down into the oversold area right when we're into this kind of correction here for wave 4. And consequently, this is again holding the support area of this area here. So again, that's held really, really well for Cardano. We then saw another surge to the upside where we entered the overbought area, most recently just up here. And again, this is in relation to where we were over here. You can see how we were overbought when we saw these red candles, and now we're seeing some red candles just over here as we are leaving this overbought area in the same way that we did previously. This actually is then going to be quite encouraging to see us come back up into this overbought area as we continue the push to the upside and finish this fifth wave really, really strongly here. Now, we do have the Fibonacci retracement tool from the high of 3 and the low of 4. That shows about $7.22 as the theoretical 4.236 extension and peak of the bull run. But we think that actually it's likely to go higher towards that $10 range and maybe even higher than that, depending on what this transactional volume now looks like with these smart contracts on chain. So overall, there's a good push to the upside here that I think is going to be taking us up towards that $10 range. But I am mindful that the technicals is showing us at about $7.22. So we will be reviewing the data to see what else is potentially on the horizon when we start seeing a good surge to the upside. Again, we're going to be taking a look at things like Solana, what's been going on there with its recent surges. And basically everything else that's kind of transactional based, right? Take a look at Matic, Polygon, everything that's been going on with that. And once that kind of transactional volume really hits the mainnet, it really pushes on significantly. So overall, this weekly chart is very well structured. There are no problems. Again, we saw a bit of a natural event. Because when I was looking at the data before the Alonzo hard fork combinator event, it did indicate that we needed to pull back. Obviously, we saw HFC being successful, and then we started to see the pullback occur anyway. So I think it was going to happen regardless of whether or not smart contracts were launching yesterday. So again, it doesn't bother me in the slightest. Everything here is looking pretty good on the weekly chart on the bigger view. So when we actually go down into our daily, we get to see a little bit more of that clarity, right? We can see here's the pullback right now kind of happening after we reached those highs yesterday and the day before. But again, we're pulling back. This is really natural within the space. And on this daily chart, we are oversold. Okay, and again, same way that we were down here, oversold. So we're looking for a good push back to the upside on this daily. We were up over the overbought area for quite some time. Natural pullback just in the middle here and taking us down nice and low. And then as we surged up, we were actually dropping the momentum down, right? So we already know that there was a loss of momentum way before we actually started to see the smart contracts. We did see that Bitcoin pulled us down. We pushed back up again from here. But again, everything is actually pretty low on this daily, so that's now been pretty positive to push us back to the upside in the longer term. So a little bit of volatility, but doesn't really bother me too much because the bigger picture is pretty much showing us pushing up significantly to the upside. We can take a look at that Fibonacci, as I said, from the peak of 3 and the lower 4. The first price target, which we almost got to, was $3.37. We found a bit of resistance up here at $2.97, wicking just above to the $3.10. After the 1.618, we do have that 2.618. This actually comes in at $4.84. And again, that would be a significant push from the current position too. We have the 3.618. This is $6.31. And like I said previously, the full 4.236 extension comes in at $7.22. And again, that just runs from the peak of 3 and the low of 4 on our fourth wave correction as a part of Elliott theory. So again, this is kind of where we see one of the potential end zones for Cardano during this particular bull run. But I think the $10 is probably going to be a psychological barrier that we hit and then start to see a bit of a pullback. And I know a lot of people will be saying that we can't go that high because of market capitalization, all of that kind of stuff. So I have been kind of talking about this quite frequently because the sheer number of comments is just getting a bit daft on not understanding what market cap is and what market cap is not. So I'm going to just quickly cover that again for those who do not yet fully understand that market cap is nothing more than the last sold price multiplied by the circulating supply. Okay, so it is not representing the amount of money in the project. It does not represent the amount of money that's flowed into the project. It does not represent the liquidity inside a project either. It is a simple calculation that shows you price. Okay, it's the last price that someone in the world bought Cardano multiplied by the circulating supply. Okay, and a good example of why this is important to understand is that I bought Cardano at less than 10 cents, yet I did not pay $2.42 for it. Right, so the current market capitalization assumes that my Cardano was bought at $2.42, which it was not. Okay, so the market capitalization doesn't represent anything useful. It kind of is supposed to give you an idea that there's value here, but actually it doesn't actually do anything regarding value at all. It just shows you a simple calculation on price, okay? And obviously it's not very useful if you're thinking it's going to be a barrier to entry or a barrier to price discovery by using market capitalization. Market cap cannot be used as a way to explain that you're not going to get to $10, for example, because that market cap is nothing more than price multiplied by circulating supply, right? So there are two things that you have to consider when it comes to price discovery and how you get there. One, you need to have a circulating supply that is being squeezed. And what I mean by this is something that is taking that circulating supply off of exchanges, not for sale, locked up somewhere. And a good example for Cardano is the stake pools, okay? You can stake your Cardano in your ADA and basically earn a passive income on doing so. We run a stake pool here. Check it out. It's called Cheeky, and you'll find that via, your Yoroi wallet, for example, or the Deadliest wallet. But ultimately, those stake pool operators and stake pools have loads and loads and loads of ADA locked up. Now, it's not really truly locked up, but you do earn a very nice passive income on your ADA. So I know a lot of people in the space are never going to sell their Cardano. They're just going to live on the interest that they earn, if you will, by basically having it delegated to a stake pool. And when you actually delegate your Cardano to a stake pool, it's off of an exchange. It's it's usually some form of wallet, and it's basically, if you're using something like a Binance stake pool, for example, locked up for like 30 days. So what you end up there is a squeeze on the supply. It's not available to buy. Okay, so new investors or new people looking to buy Cardano, the supply is already being squeezed. And when you have something that is scarce, obviously the value naturally goes up. Okay, but the second thing that is required to see significant price increases is demand, right? So you obviously have a project that maybe it's just launched its Cardano smart contracts, for example, right? And as a result of that, there's going to be people who are looking interestingly at various different applications that are being built and launching on the ecosystem. And as a result, they might need to buy some ADA to be able to transact with those applications. Okay, and therefore there's going to be a demand for ADA, and the more apps, the more transactions that appear on the Cardano ecosystem, the higher the demand goes. Then there's all those speculative investors who are looking at Cardano thinking the price is going to be going up. They're going to be looking to buy more Cardano, to hold the Cardano, take it out of circulating supply and build on more and more demand. You'll start seeing a FOMO occur, and this huge demand on an already squeezed supply will see this particular asset absolutely surge. Okay, those two things are the only things that really matter when it comes to price discovery. And for the case of Cardano, the world's most decentralized ecosystem in the world, courtesy of those stake pools, it's going to make it incredibly lucrative, in my opinion, because ultimately we're going to start seeing a huge surge with transaction. This is something that Chris has been talking about quite a bit. And of course, we've got a squeezed supply already because there's so many stake pool operators already operating with huge amounts delegated into the ecosystem. The circulating supply is already dwindled down. And of course, we're going to start seeing that FOMO really kick in soon on Cardano, and as a result that price is going to absolutely soar. And one thing that is not a factor in that price discovery though is market capitalization. So it's really important that we understand what it is or what it isn't. It is not a barrier to entry, it's not a barrier to pushing the price up, and it doesn't really actually do anything useful to an investor in this space. It's supposed to give you an idea of value, but it simply does not, because the calculation is too basic and it needs to be more sophisticated than it currently is. It's important that you understand that. And if not, then dive into what market capitalization is in more detail, do more research. I'm obviously not a financial advisor. Chris is not a financial advisor. There is no substitute for doing your own research. So just get into it, understand it, and you'll be fine. The other thing that I want to talk about here on Cardano before I close this video off is the underlying data from the Evide.io dashboard. Does this artificial intelligence machine learning actually show us any potential problems with Cardano? Obviously, we're seeing the pullback, right? A lot of people are a bit nervous. Maybe they'll be selling their Cardano at a discount. I don't know. But what I can say is there are no issues with the underlying data from the artificial intelligence perspective here at Evide.io. We can see that we are an A3 cryptocurrency rating, and this updated a few hours ago. So again, no problems have been recently identified here on this system. And we can see that the fear and greed index has slipped down a little bit. It was extremely greedy. It's no longer extremely greedy, but it is definitely greedy still. Up there is an A3 rating. Moving averages are perfectly fine at an A2 rating. We have a Sharpe ratio, A2. Again, no problem there. We did come close to just dipping below that 50-day average, but again, we started to move back to the upside there. So the risk-reward ratio is working really well for us. Down the bottom here, we have an A1 for profitability, the best rating it can get from an ROI perspective. And of course, the AMI-HAD ratio here in A2, so no problems with liquidity either. So overall, there was no problems with the underlying data for Cardano's ADA. So again, there's nothing that we should be concerned about for the long term. Everything is looking pretty good, and we should continue to see a good growth to the upside here on the Cardano in the near future. A little bit of volatility now, but again, this will be short-lived. We can take a look at the hourly here, and we can see how we didn't hold our support of our upward trend, but that broke down. Instead, we got to find resistance at $2.44. But that being said, we are oversold. We are looking now for a good surge to the upside on the hourly, so we'll see a bit of a push back to the upside soon, I do feel. Guys, I will leave that video here. If you have found this useful and informative, hit the like button. I really do appreciate that. If you are new to the channel, then do subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With this said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.